So with financial reporting, basically, we're going to be looking at first conceptual, or we need to look at conceptual framework and regulatory framework, where we're going to be discussing various issues such as the objectives of financial statements. We're going to be looking at issues such as users of financial statements. We're going to be discussing elements of financial statements. Recognition of these elements and measurement basis. And then still under that, we will conclude on issues such as the qualitative characteristics of financial statements. So, all right. So these are typically theory areas that you will be reading on: objective of financial statements, users of financial statements, elements of the financial statement, how we recognize and measure elements, then qualitative characteristics of financial statements. From conceptual framework, like to talk about accounting standards. So the IASs and then the IFRSs. From there, we discuss the published accounts or published financial statement, where we're going to be looking at the statement of financial performance, statement of financial position. Then we'll look at the cash flow statement. So now the reason why we need to build it up in this manner is that, number one, I'm not going to really go through everything here because it's a reading area. I'll just guide you on the things that you have to read. I'm just going to be focusing on issues about the elements, discuss or describe the various elements, then I'll switch my attention quickly to the accounting standards. Because when we are doing the accounting standards, we will look at recognition and measurement of the elements in the financial statement. Then about the qualitative characteristics, there are things that you have to read on your own, so I'll just guide you to read on those things. So I'll not be doing those things much in class. Now, when we look at accounting standards, the reason why we need to look at this before that is that the only way we can effectively prepare our financial statements and understand what we are doing very well is when we are strong in our accounting standards. Because the footnotes to the financial statement are broadly going to be based on accounting standards. So we need to understand our accounting standards. So once we understand the accounting standards, then we are good to now prepare what? The financial statement. But then, when we are looking at the published financial statement, this is for a single entity, like a company. But then, what if we have a group entity? So from here, we come to the group financial statement. And this is going to be a very simple group where we look at a parent company that has one subsidiary and then possibly a joint venture or an associate. So it's going to be a simple group structure. Corporate reporting, that is in level 3 or part 3, is where you'll be doing a complex group structure, where you have a parent has a subsidiary, and that subsidiary also has a control over another company and other things. But at this level, it's just going to be a simple group structure. Right after that one, we'll look at the final aspect, which is the interpretation of financial statements, ratios. So it's just a build-up of what you did in F3, basically, subject to the fact that you remember everything you did in F3. You remember them, right? Some, right? So we did group accounts in F3, some introduction to it. Here we'll take it a step further. Interpretation of financial statement, just almost the same thing as what is in F3. Publish accounts, what is in F3, we keep it a notch of all of these things which you have idea over. Then the accounting standards, F3, we didn't really look at accounting standards, but here we're going to be taking them more seriously. So these are the 5 things we're going to be looking at, and the questions are going to be spread across these in the exam hall. So it's very important that each aspect is known very well and you understand what it entails in each of the aspects. So let's begin our discussion with elements of the financial statements straight up. Then I'll turn my attention to the accounting standards. Now, when it comes to financial statements, what are the elements in the financial statements? Assets, liabilities, revenue, or income. You're going to tell me the difference between the two. Expenses. What else? Equity or capital. So what are assets? What are assets? You sold the definition. You have sold the definition. Yeah. So how much money did you take? For free. Then you didn't sell. You dash it as a gift. What about liabilities?
And even after, but I can't really.
Okay, don't tell me the dito like the word for word. If we say an asset, per your understanding from FR and as a business student now, what would you think is an asset is or assets are?
A property owned by a business.
Properties owned by a business.
Owned or controlled
by a business.
Yes.
Okay. Then what about liabilities? What about liabilities?
I'm trying to put my own words.
You are trying to put but your own words, they are not coming in. Alright. What about what's the difference between revenue and income? Are they the same? Okay, what's the difference? Come on, give it a shot. Give it a shot in your own words. Give it a shot.
I know the other thing,
But the real difference. Okay, so let's say I sell goods, right? Let's say I sell water. When I sell the water, I receive money. Is that a revenue or an income? That's a revenue. So what then will be my income?
Come again.
I am a shop owner. I sell this water. So you come to buy, I sell, I receive money. Everybody sells, I receive money. The money I'm receiving, is that a revenue of the business or the income of the business?
That's revenue.
That's a revenue. Okay. I'm the same person selling the water. I use the PC for my data entry. Then my PC broke down and I sold the PC. The money I get from the PC, is it a revenue or as an income?
That's one is an income.
Why? Now you are there. Why?
Yeah, because as for the water that you sold out, that's what is a business that you.
The core operations or the core activities of the business.
Yeah.
So the income has to do with money that we receive from what? The non-core activities of the business. I hope you get the idea. Right. So let's take the definition for what assets are. Like you said, you mentioned own, but you change it to become control. Because really, when we say assets, it's not about things that the business owns. It's just about things that the business controls. That's very important. So assets, these are resources. These are resources. These are resources that are controlled by an entity. These are resources that are controlled by an entity as a result of past events. As a result of past events, from which future economic benefits will flow to the entity. From which future economic benefits will flow to the entity. From which future economic benefits will flow to the entity. So that is an asset. So when you come and you take this asset, the reason why it is not about what you own, but rather what you control, is that when it comes to assets, you have two choices. You can purchase the asset or you can lease the assets. When you purchase the asset, you have paid money for it, so you now own it. But when you lease the asset, and when it comes to leases, we'll look at this later on. We have the finance lease and then the operating lease. Operating lease is like normal rent, but the finance lease is capital lease, where there is transfer of risks and ownership. So legally, you don't own the assets, but because of the substance of the transaction, that there is a transfer of rights and risks and rewards of the asset to you, the asset becomes literally your own. It means you control how the asset is used, and the revenue that is generated from the asset doesn't go to the owner of the asset, but it comes to you. That is why we don't use the word own, but we use the word control. Then we say that the future economic benefits of the asset. Now, future economic benefit simply means it can be revenue, it can be income, or it can be potential services of the asset. These three things can be what we refer to as the future economic benefit. Now, when we buy this laptop, you realize that this laptop will directly not give us money. Agree? For my business. Directly it's not giving us money. But then it has what? A potential service that it renders to the business. So if this laptop can render that potential service to us, then it becomes what? An asset. On the other hand, if I go and buy this water, which I am reselling, it's also an asset in terms of inventory, and that will bring me what? Revenue. So this future economic benefit could be a revenue, it could be an income, or it could be a property. One of the things that it can be an income is where you have investment property, and we'll look at that one later on, IAS 40, where you buy an asset and it is not for use for the business, owner occupied, but it is for rental purposes or for capital appreciation. So in that case, I am going to be receiving what? Income and not revenue. So anytime we have the rights to control an asset, and any of these three things are going to flow directly to the entity, then that is what? An asset to us. So not necessarily about we paying and owning the asset, but it's about controlling how the asset is used. 2. Liabilities.